This is Chad, and I'm going to be explaining to you how the triggers work for DataSync. Now, to reiterate, in Salesforce, the objects that we sync are accounts, closed won opportunities, and products. In QuickBooks, we support customers, accounts receivable transaction types, which are either invoices, sales orders, sales receipts, credit memos, or invoices, and then of course items and services. Now, you're going to want to enter information, do all of your data entry into Salesforce or into QuickBooks. You don't want to do it into both because then you're doing duplicate data entry, and that is what we're trying to avoid with DataSync. You're going to want to enter your information to Salesforce and then let DataSync create it in QuickBooks, or put it into do the data entry into QuickBooks and let DataSync create it in Salesforce. Now, in Salesforce, if you're entering information into Salesforce, to get information into QuickBooks, you're going to need to follow some few basic rules for triggers. For accounts, say I enter an account, I don't enter either of these. I have an account in Salesforce and I want it to be a customer in QuickBooks. It doesn't go over automatically. I can use a button that we actually have in the account screen in Salesforce called Sync with QuickBooks. Now, if I push that button while in the account, I create ABC Company and I enter the billing information, then I push this button Sync, it will create that customer. It will do a one-way push and create that customer in QuickBooks using all this information that I entered into Salesforce. Otherwise, as I said, if you just create an account in Salesforce, it won't go over. So let's say I'm creating the whole shebang. I create an account in Salesforce. I create an opportunity in Salesforce. I take some products out of the products module and I put it into the opportunity in Salesforce. I mark the stage as closed won. The next time the sync runs, which by the way, we can either do it recurring, so hourly, every 6 hours, 12 hours, 24 hours, or you can set it as never and run it manually by yourself. So assuming we're doing it on the hour, because we are meeting the requirements, we have a closed won opportunity and everything else is filled out, we will take this account, create a customer in QuickBooks. Take this closed won opportunity, create a transaction in QuickBooks, and populate that transaction with the same products that we put in the opportunity here. Now, you're probably wondering, we support 5 different transaction types. Which one is it going to create? Well, in Salesforce, we have a field called QB transaction type that has in it the 5 options that we support. So, by default, let's say you have invoice set. Every time you create a new opportunity, your default, which you can set to any one of the transaction types, in this case I have it set as invoice, we'll create that in QuickBooks. So if I've got invoice as my default transaction type, when I do all this stuff to trigger the sync over to QuickBooks, it's going to create an invoice. It's going to create a customer and an invoice and populate the invoice with the products that I sold. If instead, for this case, I want to issue a credit memo, I can just change, before I run the sync, I can change it to a credit memo, and then when the sync runs, it will generate a credit memo within QuickBooks. So that is how information from Salesforce goes into QuickBooks and how it's triggered. Now, if you're instead using QuickBooks for all your data entry and you want it to go into Salesforce, it's actually a lot simpler. Because QuickBooks acts as the master, we don't have any complicated fancy triggers. If you create a customer in QuickBooks, you don't have to do anything else. You create the customer in QuickBooks, we will automatically create an account in Salesforce during the next runtime. If you create an invoice in QuickBooks, it will automatically create a new closed won opportunity label transaction type invoice. Instead, say you create a sales order in QuickBooks, it will automatically create a new closed won opportunity with transaction type sales order. So, whereas in Salesforce, when you've got your sales reps or whoever entering information, there are certain triggers that you have to live by so you don't have all the junk going into QuickBooks. So once a sales rep follows a certain rules and marks it as closed won, we will bring it into QuickBooks. However, since QuickBooks is the master, when you create any of these objects or these records in QuickBooks, we will automatically bring it over into Salesforce for you. And that's basically how the triggers work.